Dubai has several financial regulators and each one controls different activities, entities and jurisdictions. A company may be legally registered in Dubai but still lack permission to provide investment advice, manage portfolios, hold client monies and arrange financial products or provide banking services. This distinction matters when you establish a family office, a foundation, holding structures or wealth management businesses. My name is Shiraz Vaid and I'm the co-founder at Regulators Wealth. And in this video, I'm going to explain the role of various financial authorities in Dubai and how these authorities connect when you structure, manage or protect your wealth in the UAE. Well, the starting point is simple. The company registration establishes the legal entity, while regulatory authorization determines which financial services that entity is permitted to provide. Now, starting with the first one, that is the central bank. At federal level, the Central Bank of the UAE is one of country's main financial regulators. It licenses and supervises banks, finance companies, exchange houses, payment service providers, insurance companies and other financial institutions within its mandate. For a private client or international families, the central bank becomes relevant when a structure opens a UAE bank account, obtains financing, purchases an insurance product, or use a payment service provider through a regulated financial institution. A family foundation may hold shares in companies, receive investment income, or maintain accounts within a UAE bank. But this does not mean the foundation itself is carrying out banking activity. The bank remains the regulated service provider, while the foundation is the customer or account holder. The central bank also sets requirements relating to governance, capital, risk management, financial crime prevention, and the conduct of the licensed institution. This is why the banks request information about beneficial ownership, business activities, source of fund, and source of wealth. For a substantial family structure, the banks will normally expect the legal documents and the commercial explanation to match. If the structure contains a foundation, holding company, operating company, or investment vehicle, each layer should have a clear purpose and a documented connection to the assets that it owns. Now, the next is the Securities and Commodities Authority, or commonly known as SCA. It is a federal regulator for securities and capital market activities in the UAE outside the separate financial free zones of DIFC and ADGM. SCA regulates areas such as security markets, brokerage, investment management, funds, financial promotions, and other activities connected with financial products. The exact permission required depends on what the company intends to do. Giving investment advice, managing a client's portfolio, arranging investments, promoting a fund, or holding financial assets can fall under different regulatory categories. A commercial license containing words such as investment, wealth management, financial consultancy, or asset management does not automatically confirm that the company has regulatory approval to perform those services. You should identify exact legal entity, check with the authority of issuing the license, confirm the activities shown on the regulator's public register. This becomes particularly important when a family office uses an external advisor or investment manager. The family may establish its own holding entities, foundations, or special purpose vehicles, but regulated investment decisions should be carried out by properly authorized party where authorization is required. The ownership structure and the financial services should therefore be reviewed separately even when they operate together as part of one wider arrangement. Now I would like to discuss DIFC, that is the Dubai International Financial Center. It is a financial free zone, a legal jurisdiction, an international business center with its own commercial law, codes, company registration framework, and regulatory system. DIFC itself is not a regulator for financial services. The financial regulator operating within DIFC is the Dubai Financial Services Authority, commonly known as the DFSA. The DFSA authorizes and supervises financial businesses carrying out regulated services in or from DIFC. These activities can include banking, investment management, financial advice, fund management, custody, trust services, and other financial services. This means there are two separate questions when establishing a DIFC entity. The first is whether the entity can be registered in DIFC. The second question is whether the planned activity requires DFSA authorization. A DIFC foundation, holding company, prescribed company, or family office may be established through the DIFC registration system without automatically becoming a DFSA regulated financial firm. For example, a DIFC foundation may hold shares, investment accounts, family businesses, property, holding vehicles, or other assets that are part of a succession and governance structure. However, that registration does not allow foundation to provide investment management services to third parties. A family office also requires careful analysis because a single family office dealing only with the affairs of one family may be treated differently from a business serving several unrelated families. The activities being performed, the people receiving the services, the way fees are charged, the level of investment discretion, and the handling of client assets can all affect the regulatory position. DIFC provides the legal and corporate environment, while DFSA supervises regulated financial services conducted within that environment. Now we will discuss the ADGM. ADGM stands for Abu Dhabi Global Market. Like DIFC, it is is an international financial center with its own commercial legal system, courts, company registration framework, and financial services regulator. Within ADGM, the registration authority is responsible for incorporating and registering companies, foundations, SPVs, branches, and other permitted legal entities. The financial regulator within ADGM is the Financial Services Regulatory Authority, usually called FSRA. The FSRA authorizes and supervises firms that conduct regulated financial activities in or from ADGM. A company intended to provide investment management, financial advice, brokerage custody, fund services, or other regulated services must determine which financial services permission it requires. An ADGM foundation or SPV can be used as part of ownership, succession, or asset holding structure. It may own shares in operating businesses, investment companies, or other family assets. This remains different from providing a regulated financial service. If an external investment manager, advisor, broker, or fund administrator works with the structure, that provider must hold the permissions required for its own role. The separation of responsibilities supports clearer governance because the foundation or holding entity manages ownership and continuity, while authorized professionals carry out regulated financial functions. ADGM is therefore the jurisdiction, the registration authority handling the entity formation and administration, while the FSRA regulates financial services and the ADGM courts provide the judicial framework. Now we'll discuss the Virtual Asset Authority. Virtual assets have a separate regulatory layer. Particularly in Dubai, it is the Virtual Asset Regulatory Authority, commonly known as VARA. VARA regulates virtual asset activities across mainland Dubai and most Dubai free zones. VARA's scope can include virtual asset exchange services, brokerage, custody, transfer services, investment management, and other regulated activities involving virtual assets. Holding cryptocurrency or other digital assets as part of a family's own investment portfolio is different from operating a virtual asset business for clients. However, the legal analysis can still depend on how the assets are held, who controls the wallets, whether custody is provided to another person, whether investments are promoted, and where the activity is carried out. Within ADGM, the regulated virtual asset activities fall under the FSRA framework. In other parts of the UAE, SCA and the central bank or any other competent authority may become relevant depending on the type of asset and services involved. For a family using a foundation or holding company to own digital wealth, the structure should clearly document legal ownership, wallet access, signing authority, custody arrangements, security controls, and evidence showing how the assets were acquired. A legal entity can improve governance and continuity, but it does not remove regulatory obligations from a custodian, exchange, advisors, or service providers. A single family wealth structure may interact with several UAE regulators because different authorities supervise different parts of the arrangement. Consider a family that establishes a DIFC foundation to hold its long-term assets. The foundation owns a holding company, and the holding company owns the shares in an international operating business. The family's liquid investments are held through a UAE bank supervised by the central bank. An investment manager may be regulated by DFSA, the FSRA, or recognized regulator outside the UAE. If the family also holds digital assets within Dubai-based virtual asset provider, VARA may regulate the provider. Each party has a separate function. The foundation supports ownership, governance, succession, and continuity. The holding company separates business or investment assets. The banks provide accounts, custody, and payment services. The investment managers makes or implements investment decisions. The relevant regulator supervises the licensed institution performing the regulated activity. This division of responsibilities should be reflected in the legal documents, contracts, and internal approval procedures. It becomes more important when family members live in different countries or when assets located are across several jurisdictions. A UAE structure must still be reviewed alongside families' tax residency, domicile, citizenship, inheritance law, reporting duties, and the location of each asset. Establishing an entity in Dubai does not automatically remove tax or reporting obligations in other countries. In the same way, the advisors regulated overseas does not automatically have permission to provide regulated services in or from Dubai. Now, before working with a UAE financial firm, identify the exact legal entity rather than relying on its trading name or brand. Confirm the authority that issued its commercial license, the financial regulator responsible for its activity, the services it is authorized to provide, and any restrictions attached to its permissions. You should also confirm whether the person advising you is acting for a licensed entity shown in the regulator's register. For your own structure, establish who legally owns each asset, who has the authority to make investment decisions, who can transfer money, who controls the bank accounts, and whether any service provider has custody of family assets. Now, if you want our help, you can request a personalized asset protection plan by clicking the link in the description below. That's it for today, and I will see you in the next video.